Hey guys, it is Julie here with TipRanks, and today we're discussing 3 great growth ETFs. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're discussing a few growth ETFs or electronically traded funds. ETFs are a great way to get easy diversification across a broad spectrum of stocks, and all ETFs tend to have a different goal. So today we're focused on ones that are trying to achieve above average returns. Keep in mind though that with any great reward does come risk as well. So while these focus on achieving some big growth, there could be a lot more volatility included as well. All that to say, make sure you're always doing your own research and due diligence, understand your risk tolerance and how any new investment fits in with your investment goals. Now let's dive right into these growth ETFs. First up, we're taking a look at the Vanguard Growth ETF. They trade under the ticker VUG, currently priced at $250 per share. They are fairly flat this past year, seeing some big up and downs, but are up 44% after the last few years, and 21% in the last 6 months. They have assets under management of $82 billion and an expense ratio of 0.04%. The Vanguard Growth ETF tracks the CRSP US Large Cap Growth Index, which tracks both large and mid-cap companies with growth characteristics. They look at the following factors: future long-term growth in earnings per share, future short-term growth in earnings per share, 3-year historical growth in earnings per share, 3-year historical growth in sales per share, current investment to asset ratio, and return on assets. VUG currently has 242 holdings. And with large cap companies included, you can see a lot of familiar tech names up at the top like Apple, Microsoft, and Amazon. But if you scroll down, we do have some good diversification with MasterCard, Home Depot, Eli Lilly, Costco, McDonald's, to just name a few. All the way at the bottom here, we can see the sector breakdown with a pretty heavy weighting in technology at 55%, followed by consumer goods, services, and healthcare. The ETF also pays out a small dividend of 43 cents per share on a quarterly basis for a dividend yield of 0.65%. While Wall Street analysts don't rate ETFs themselves, TipRanks is able to compile all of the ratings on the individual holdings within the ETF to give us an overall view. And overall, the VUG holdings come in as a moderate buy, with a heavy weighting of 66% buy ratings, 29% holds, and just a few percent of sells. The overall average price target would be $285 for an upside of over 13%. And here you can see some of the stocks with the highest upside and the biggest downside. Second, we're going to look at iShares Morningstar Mid-Cap Growth ETF. This ETF trades under the ticker IMCG, currently priced at $56 per share. They are smaller at 1.4 billion assets under management and are down 4% this past year, but up 35% over the last few and 7% in the last 6 months. They have an expense ratio of 0.06%. As the name suggests, this company focuses on mid-sized U.S. companies whose earnings are expected to grow at an above-average rate. This ETF has 324 different holdings. And with a focus on mid-cap companies, you'll see we have a much smaller percentage focused in that top 10%. In the list here, you're not going to see it being dominated by those big tech names. We still have recognizable companies like Hershey, Workday, Ross Stores, Marvel Technology, and many others in the list. Down below, we have a big focus on tech still, but much lower than the other at 32%, followed by financial, industrial goods, and then healthcare. And yes, they also pay a small dividend of 12 cents per share on a quarterly basis for a yield of 0.92%. With nearly 3,500 separate ratings on the IMCG holdings, the ETF overall comes in as a moderate buy. That breaks down to about 60% buy ratings, 34% holds, and nearly 5% sells. The average price target works out to $66, which would be a growth potential of 17%. And down below here, we have our stocks with the highest upside and the biggest downside. I think Plug Power has been included on both. And third, we have the SPYG portfolio S&P 500 Growth ETF. Trading under the ticker SPYG, currently priced at about $55 per share, they have $16 billion in assets under management and a low expense ratio of 0.04%. And you can see a fairly similar chart compared to the others, down a few percent this past year, up 44% over the last few, and about 15% gains in this last 6 months. This ETF primarily focuses on large cap companies from the S&P 500. They track the S&P 500 Growth Index, which chooses stocks that exhibit sales growth, earnings change to price, and momentum. They have 233 holdings in their ETF, and with a focus on large cap companies, you are going to see some familiar tech names. and a higher percentage focused on that top 10, as that list is dominated by Apple, Microsoft, Nvidia, Google, a lot of familiar names there. Moving down the list, we do have Eli Lilly, MasterCard, Chevron, Johnson & Johnson, PepsiCo, some other great companies as well. Down here, we can see the sector breakdown, 42% in technology, then followed by healthcare, consumer goods, and utilities. Their ETF comes in as a moderate buy with over 3,000 analyst ratings and a pretty similar breakdown with 62% buys, 32% holds, and over 4% sells. The average price target would be nearly $63 for an upside of 13%. And we do have a bit different looking list here as far as our biggest potential or biggest downside, with stocks like Moderna and Enphase Energy on the list. So there we have 3 growth-focused ETFs. Now, all of these companies have some very low expense ratios and similar objectives, just some slight differences in the stocks that they focus on. So this just gives you an idea of some of the great growth ETFs that are available out there for you. Let me know your thoughts in the comments down below on these 3 or some of your other favorite growth ETFs, as there are a ton out there, and I always appreciate hearing from you guys. Thank you so much for watching. If you made it to the end, don't forget to hit that thumbs up button and make sure you're subscribed to the channel as well. Have a great day, and I'll see you back here next time.